My name is Naomi Nwokolo. I am the Executive Director of the United Nations Global Compact Network Nigeria, and it is a great pleasure to be moderating this very high-level and interesting session this morning with my co-panelists, Mr. Soji Apampa, Emeka, Emetarom, Andreas Voss, and Mr. Ayuli Jemide. You're welcome. Our topic today is compliance in business, the role of technology in ensuring integrity in business. Now we know we cannot talk about sustainable development without ethics and compliance as well. So in the face of a global pandemic and the call for all parts of society, both public and private sector, to operate in a responsible and sustainable manner, ensuring respect for human rights, labor rights, regulatory compliance, and ESG, and the sustainable development goals, the role of ethical business cannot be overemphasized. Both government and private sector must not pay lip service to ethical business, and they must ensure that they are compliant and work hand in hand to promote and create a safe environment for both local and foreign investments. The response also to the coronavirus has provided a fresh opportunity to reevaluate our old ways of doing things and be receptive to smart technologies that will rebuild trust, accelerate the fight against corruption by the smarter use of new technologies and data analytics, and promote the ease of doing business. This morning, we are going to be discussing the overall importance of regulatory compliance in business and how it affects economic growth. We're also going to be talking about the role of technology in advancing ethical business and the challenges of course, the solution. Ladies and gentlemen, welcome once again to this panel. And to open the panel session, my first question will go to Mr. Ayuli Jemide of Deutsche Solicitors. My learned counsel, Mr. Ayuli, it is no doubt that non-compliance negatively affects the economic development of a country. So, but from a legal perspective, could you please share with us why regulatory compliance is good for business and what can multinationals do to protect their investment while also operating in a compliant manner? Thank you.
Thanks a lot, Naomi, and thank you everybody for having me here. I think that if we were to talk about regulatory compliance, the big subject matter in the room as far as Nigeria goes is the MTN case. I think that was in terms of value of fine and every other box that we can tick. That's probably one of the biggest things that happened in relation to regulatory compliance. And it's just good to tell that story just for 1 minute. And it's so straightforward. I mean, MTN was supposed to deregister on inactive subscribers, and they didn't. And the law, very clear on it, it says $1,000 for every subscriber. You do the multiplier, it came to 5.2 billion USD, right? Was MTN compliant? No. Was the fine legal? Yes. Did it seem exorbitant? Of course it did, because it hit their bottom line. All the indices showed that in terms of what the company was making out of Nigeria and worldwide, that was a lot of money. And the key lessons to learn is regulatory non-compliance can be very expensive, even if it's inadvertent. And I'm not saying MTN was inadvertent, but let's assume it was. And I don't know if it was or it wasn't, but even if it's inadvertent, it can be very expensive. And the other lesson to learn is that sometimes we shouldn't presume that regulators will turn a blind eye. Depends on what's going on at the time. Regulators, many of them can be like taxmen. And today, with recession in many countries, governments are trying to improve their internally generated revenue. Now, so what's my advice to multinationals? I think my first advice is that multinationals should be multinationals. And what do I mean by that? I mean, if you are a multinational, it presupposes that you are a citizen of many countries. So the first thing you want to do is, if you're operating in an environment, you should make sure that you operate in a way that you have local knowledge and you're able to deal in that environment, the way you need to deal in that specific environment. You can't deal in Nigeria the way you would deal elsewhere. The other thing to note is people should have a strong compliance department. Compliance shouldn't be something that you do by the way. And this department should be manned by people who are knowledgeable and have expertise. And going back to being a local business in the environment, I think that you should get people in the team who have worked in that country and understand how things function. And the real reason why I say so is sometimes you read the books and it says one thing, but the way the regulator applies it may be totally different. And we see this happen on a day-to-day basis with Federal Inland Revenue Service, for example. You can get 3 or 4 different opinions from one regulator, and depending on who you are talking to, right? You can go to different departments and they all give you. So if you have someone who has worked in that field, he will be able to tell you these are the interpretations that the regulators have given over time. The other thing is people need to learn to engage regulators. Sometimes there are gray areas. You need to keep asking questions. Never stop asking questions. And then when you talk about engagement, I think that engaging regulators, you need more emotionally intelligent people than people with high IQ. I don't think that engaging regulators is about, IQ. It's more about EQ, because the people that you're dealing with are human beings and you have to find a way of dealing with them. I think I would say one more thing before I hand over, which is that people have to constantly check themselves. So you must have your own internal mechanism for making sure that you are compliant. So your compliance department has to do, a regular internal check to see that at every point in time you are ticking the boxes. Thank you, Naomi.
Thank you very much, Mr. Jemide. Thank you for outlining that. You've given us free legal advice this morning on the need for multinationals to ensure that they have a compliant department and make sure that they take the necessary information they'll need in their business. So I hope multinationals in the room are listening. Thank you. So my next question will go to Mr. Andreas. I actually read your sustainability report this quarter, and it really it touches on areas of technology. So I'd like to ask you, with the advancement of technology in the financial services sector and more investors trading digital assets, what should the financial services sector do to ensure more compliant and ethical business operations?
Thank you. Also, first of all, thank you very much for the invitation. So I think the question is very interesting because it implies that the financial sector is not compliant. So I think in the last 5 to 10 years, the regulators have done tremendous work, in particular onto the financial industry. And I perhaps don't know any industry except the financial industry which is more regulated in today's world. So that's number one. However, the technology and digitalization, of course, has a huge potential to the financial industry of disruptive movements and changes. So no doubt about that. If you then also consider that, for example, in Africa, there is a yearly gap of trade finance transactions of 1.5 billion. So that are transactions which are not able to be executed due to the lack of capital or access to capital. So digitalization could shorten this gap. So this is a huge potential. However, one thing is extremely important. So the financial industry has to cooperate with the technology And I think the financial industry has to do two things. First of all, to cooperate with the technology, with the fintechs, and number two, to keep or to continue to be the front runner um, on compliance and integrity. So, for example, you have perhaps read that the banks have huge ESG agendas, environmental, social governance agendas. So, and banks in each industry, in each economy, are the catalysts of enabling companies doing business. So, and if banks have strict requirements in terms of compliance, governance, social standards, environmental standards, and those criteria are fixed and accessible for everyone. So this is automatically makes sure that investments follow the current standards of compliance.
Okay, thank you very much for those very wonderful points of yours, which is truly appreciated. So my next question will go to our tech experts in the room, Mr. Emetarom. Mr. Emeka, your company Appzone is Africa's leading fintech disruptor and a provider of software solutions to the financial services sector in the continent. So I'll ask you, as a tech expert, would you say that technology is able to play a significant role in ensuring compliance in business for both the public and private sector? And depending on your answer, though, how and what is needed to implement this? Thank you.
Thank you very much, Naomi. First of all, definitely, technology is able to play a role. I personally think that everything would be powered by technology in a couple of years. So, that role cannot be overemphasized. One of the challenges you have generally when it comes to compliance, and especially as it can affect the way companies do business, government, parastatals, and MDAs, is accountability, right? How do you ensure that people are accountable? We have problems with ID management. You need to sort out the issues relating to ID management. When the central bank put forward the initiative on bank verification numbers, the BVNs, it was a significant step in solving this problem, and I'm happy that the NIMC has gone one step further to roll out the NIN nationwide, so that not only account holders, everybody can be uniquely identified. This is important because, you see, if you will be identified when you transact, then you're going to be careful about how you do business. You be careful about the kind of transactions you authorize, and so on and so forth. It helps to curb corruption and graft and the things of the like. Related to that also is, so what do you do when you have a situation where someone has committed fraud, for instance, and you need to find them? We need platforms that can manage residence registries, for instance. And these systems, both the ID management systems and the ones that manage like data about residents and people where they live, they need to be API enabled. API enabled so that in the case of when people are opening accounts, bank accounts, today the banks handle address verification manually. It's a ridiculous process. Sometimes they have to send individuals to the addresses to physically verify that the customer lives in that place. And it's not so straightforward, because the fact that you can find someone somewhere, and most of the time what these agents do is just go there and ask if anybody around there knows the individual. In many cases, no verification is done. It's just reported as verified, which makes it such that when you have these cases of fraud, people literally disappear. You go to the residence, the registered address, either the address doesn't exist or the person doesn't exist in that place. And to be told, people's addresses change. I'm sure that some bank accounts I opened in 2002 with what used to be Intercontinental at the time, still hold my very first address, which is not even in Lagos State. Systems that can allow us continually update these details, but then also provide APIs that allow banks to verify the identity and the residence of individuals will go a long way so that we can ensure one level of accountability. The second is transparency, especially in payments. The anonymity that comes with cash transactions is a problem, because then it means cash can exchange hands and it's completely faceless, nobody knows, and money appears as a cash deposit inside someone's bank account and there's no trace. I'm very excited about the CBN's disposition towards cashless, because if we can achieve 100% cashless payments within the economy, then everything moves and is trackable. If you illegally access funds, the government would be able to follow the money kobo for kobo to every account that's gone to, right? And we will be able to pull those funds back, thereby also, reducing the likelihood that people would engage in such sharp practices. To achieve this, we need to have financial inclusion, and the banks can't do it alone. The cost of acquiring customers is really high. Once you start to go towards rural areas and the real hinterlands, it just isn't profitable to acquire a customer there, because those customers transact at a very low level and the accounts are low value. So agent banking platforms that allow third parties to go out and acquire customers, very, very, very useful. And then you have systems that can be put in place to curb misappropriation. And this is newer technology, like on blockchain. So blockchain tech has capabilities referred to as smart contract implementations that allow you to put rules in place that determine what kind of transactions can occur, who can be paid, who can receive funds, and whatnot. One of the benefits of the e-Naira rollout by the central bank is to ensure that at a time when the government needs to, disburse funds, intervention funds, you're probably aware of the trader money loans, the grants that came, and disbursements that went to as part of COVID relief. A significant chunk of those funds could have moved in, any direction. If the people being paid are faceless, I know that before this administration, they had some really obscure process whereby cash was handed out to individuals to go and disburse to people as part of relief. Those monies mostly didn't get to the expected end beneficiaries. But with things like smart contracts that can be implemented on the blockchain, and with the introduction of the CBDC, the central bank digital currency, e-Naira, we'll start to see some of those things so that, money doesn't move in ways that we can't control it. Now, all these platforms I mentioned are platforms that, technology-driven. Fintech companies, even though I mentioned them in 4 buckets, they're actually a lot of add-ons that can be bolted onto that, and we expect that as the fintech industry continues to develop and thrive, we would be able to, tap into these opportunities and get things sorted.
Thank you very much. I was trying to cut you, but you're also giving us very valuable information, but we're trying to stick to time. So thank you so much for your awesome contribution. Now I'll move to Mr. Soji Apampa. I want to talk integrity tech with you, because this is where we're all talking about integrity tech anyways, but you're very experienced in the public and private sector with the work you do with CBI. So, and as a follow-up to what Mr. Emeka has said, I want to ask that we now know that digitization is already permeating the integrity space through the use of disruptive technologies and data analytics that Emeka talked about. So how would you then advise the government to leverage these technology innovations to speed up the ease of doing business in the various MDAs and agencies we have in the country?
Thank you very much, Naomi. There are three things that I think the private sector will be very particular about, and we need to let the government understand that. The first is transparency. And it's not just transparent payments. Those are very welcome. It's very important. But also, it's transparency around the rules. How do I obtain a license? How do I obtain a permit? How long should it take? How much should it cost? Where should I apply? All of those things, actually, that's where the games begin when you interface with the public sector. Because if you don't know, even a gateman or a clerk could turn around and actually purport to provide a service to you and extort you in the process. And it might not be that the department itself was trying to be fraudulent or permit its staff to engage in corruption, but these things happen simply because of the lack of transparency. That's the first thing. The second thing is what the first speaker also mentioned. The fact that the rules are written in ways that are a bit opaque and subject to so many interpretations that except you get those clear, automating or digitizing the processes don't really make sense. So we need to get the government to speak, as it were, from one side of the mouth. What exactly do you mean? For example, in the maritime sector, you say this item has a particular HS code, which is the code which customs uses to determine the import duty. But then you find that if it's going to be applied in agric, maybe it's 5%. But if you're going to use it in this other industry, it's 20%. So as soon as you arrive, then you give customs the opportunity to say, sorry, I don't agree, it is 5%, it's now 20%. And you have all those kind of things which are intolerable for business. And once you do that, it's very, very difficult for both sides to maintain integrity. The third thing is that what business needs is predictability of time and cost. So if I cannot tell upfront how long it would take me to clear my goods, or how long it would take me to get a license, and then someone starts to talk about fast track, a fast track that probably doesn't exist because you didn't provide that route, then you find so many people under pressure resorting to that. So I think the kind of systems we need and the application of technology would be towards prevention. It's no use running after half the country because everybody is doing the wrong practice after the fact. It's rather that we should put some things in place. Let me give you, finally, a quick example. The Maritime Anti-Corruption Network, set up in 2012, which is a global network, and we represent them here in Nigeria. They were concerned about the UK Bribery Act. The fact that if their agent was to bribe here in Nigeria, they could be liable in the UK or liable in some other jurisdiction. And that's the kind of similar environment that many multinationals find themselves in. So they approached the Nigerian government and they gave statistics about the levels of corruption. There's been a whole process of reforms that have been going on very quietly, and I can now tell you that for vessel clearance into Nigeria, which was a big area, 2019 we had about 264 reported cases of officials demanding large cash payments from vessel captains, which dropped to 121 incidents last year. And with the reforms employing technology, this year it's been only about 40. So we've seen progressive improvements based on the application of technology. But there are still so many processes and ways of working of government that need to be brought in. in the interest of time, I won't go into that detail right now. Yeah.
Yes, thank you so much, Mr. Soji, for that awesome contribution, and also the example you gave with the Maritime network you're doing. I'm aware of that project, and I'll say big ups with the work you're doing. So quickly, I'll go back to Mr. Jemide. We're running out of time, so I'll really appreciate if we keep our submissions brief, although we know they're very knowledgeable panelists on here. So my question to you now is, we've heard about technology, we've heard about how it's really helped, in ensuring integrity in business. So I want to ask you, do you think regulation stifles innovation? So what can regulators and innovators do to work hand in hand for the good of the people?
Thank you, Naomi. How much time do we have? Should I just give you a one-line answer or 1 minute? I think regulators and entrepreneurs and innovators are usually at loggerheads. It's all over the world. You probably followed Alibaba was fined, even in China, $2.7 billion or something like that. So it's a constant battle, but I'll just tell you 3 pointers, right? When a regulator doesn't understand something, they shut it down. CBN, for example, shutting down cryptocurrency trade in Nigeria. They were trying to grasp it. Now that they are beginning to understand it a little bit more, you can see that their stance is a bit more open. The second thing is, when we are innovating, we need to think about what the benefit is for the regulator. Most times we innovate things that are just for us as entrepreneurs, but we need to be able to sell benefits to the regulator and let them see that this may increase your ease of doing business, it may increase your time of delivery. I think if you find what's in it for them, then it's easier to deal with regulators. The last thing I would say, which is probably the most important, is yes, innovation should be disruptive, but some innovation disrupts the ecosystem in such a way that the regulator's hands are tied. And I will give you a typical example. So, ride-hailing, which is Uber, Bolt, and all those people, before they came into being, we had the usual taxis, which are governed by the unions. National Union of Road Transport Workers is probably one of the strongest unions in Nigeria. And transportation unions are strong everywhere in the world. So Uber, for example, has faced a lot of pushback in many countries. There are many countries where they can't even operate. Now, and the National Union of Road Transport Workers is a political force to deal with, even in politics when it comes to elections. So governments don't joke with them. Now you come with this technology that's in the cloud and, it's taken away from their daily bread. They're in touch with the regulators, they will kick against it, they'll push against it, and the regulators will begin to buckle under that pressure. And this happens all over the world. The reason why Facebook and Google had problems in Australia was because the traditional publishers thought, well, we are becoming redundant with all this online dissemination of information. So I would stop there for now.
Thank you very much for your submissions. So, Mr. Andrea, quickly, from your perspective, what can technology play in improving compliance, especially in increasing transparency and accountability in the financial services sector?
Yeah, technology is playing already a huge role in the financial industry. Without technology, we would not be able to conduct our daily jobs, particularly in jurisdictions like Nigeria. For example, Deutsche is very big in supporting trade finance transactions, for example. So if Deutsche confirms a letter of credit, for example, and then the exporter provides us the documents and brings the goods or supplies the goods to the ports, from that point in time already, there's a huge team controlling, monitoring, checking documents, goods, spare parts, if this is consistent. We track the vessel from the port of loading to the arrival port. We see when the vessels go different routes, and then alerts, then if they divert to other regions, we get alerts. So this is important because financial institutions don't put any risk anymore on non-compliant activities. So banks are more afraid of non-compliant or non-financial risk than financial risk in these days. That's number one. So it plays already a big role. In future, it will play even a more important role, particularly again for jurisdictions like Nigeria. Two things. Why? Number one, it will increase or will support the investors' confidence, and it will also, or has also the potential to reduce financing costs. So, for example, if you get a mortgage today from a Nigerian bank or from any bank in Nigeria, or if you want to transfer assets, so it is a huge effort to do the transfer. For example, in Scandinavian countries, you can do everything digital, virtual. We recently transferred assets, for example, for a client in Scandinavia. The client was not even able or necessary to travel to Norway. They have done everything out of Nigeria. In Germany and Nigeria, you still have to go to authorities to sign physically. So a huge potential. And with this technology in place, which has to be reliable, of course, financing costs and also risk premiums decrease, which means that the financial costs in total will be lower. One caveat to that: every app, every fintech, every technology needs proper, reliable data. So you can have the most fanciest app. If the database is not correct, you have a problem. And that is something where I think there's still a lot of potential and the way to go.
Thank you very much. There's still a lot of work to do, but technology is the future. Thank you. Over to you, Mr. Emeka. We're all talking about innovation. So now, given the level of innovation within our society today, such as blockchain and the rise of fintech across Africa, like you stated earlier, how can we now encourage ethical business and ramp up the fight against corruption in our country and our society here?
Thank you, Naomi. So the short answer is we need more fintechs. It's as simple as that. There's just so much opportunity, so much that technology can do. We need more fintechs, more innovators, more entrepreneurs to come in and tap into that opportunity, set up businesses, and close out those gaps. So what we need to do, I think where we need to start is, putting things in place that can help this process, right? Essentially, one of the biggest problems with technology is the massive gap in skills, and the educational system in Nigeria is not the best. And so companies like ours and the rest in our field struggle with having to train, and we're limited in capacity. I was excited about Nobert's presentation, because I'm always happy to see companies and entities that are driving skills acquisition. I know that's more vocational, but we need a lot more of that, in the tech space and software. Second thing, of course, is in making, setting up businesses easier and improving our ease of doing business. Licenses, grants, permits, those kind of things. And then finally, funding. Funding is a major issue for fintechs. I think with what we're seeing in the world today, we need to find a way to get Nigeria to the point where we have as much funding in the fintech companies as we have in the rest of the West.
Thank you very much. I also wanted to add that there are also many organizations that are doing work around skills acquisition. Like yesterday at the German Consulate dinner, Mr. Iguan was also talking about the work he was doing around skills acquisition in the tech sector. So thank you for re-highlighting that, and also licenses and other things that they need to do. So we're running out of time, but to the audience, please get your questions ready. We can take at least two. And then let me ask Mr. Soji a final question. I want you to share with us the challenges with adopting technology to improve compliance in the public and private sector, and of course the solutions to the challenges, because we're ready to learn. Thanks.
Okay, what we've had to do, let me quickly go to the real life example in the maritime sector, is to make sure, number one, there are standard operating procedures. These were defined by the higher-ups in government, but we found that rank and file knew nothing about the standard operating procedures. So even disseminating information within the MDAs was a challenge. Secondly, okay, now we've defined the operating procedure. What happens if you do not respect it? So we had to set up a grievance reporting mechanism. So you can escalate in real time as it's happening so as to get a quick resolution, which means there has to be a way of escalating the problem. So you have a problem with a vessel, 200 nautical miles off the coast of Nigeria. We had to set up a help desk electronically to escalate it to the top of the Shippers Council, and if it's immigrations, through them to the top of immigrations, so we can quickly get a resolution. So you needed that. You needed also an accountability mechanism. And the biggest challenge has been they don't have a compliance culture. They don't have a compliance officer or department within them, so it requires big change. And finally, there's never been a consequence management framework. So even when you're talking and yes, you get this particular case resolved, you find the same thing occurring another week because the people who were involved last week were not punished. So with our constant advocacy with government, they now had to set up a task team in the ports that carry out sting operations. But even that is not enough. So we have to marry technology with the evolution of the behavior of the government itself. You cannot do all of the technology without the changes to the way governance is actually rolled out underneath. Thank you.
Thank you, Mr. Soji. This has really been a very interesting knowledge sharing session with our very powerful and intelligent panelists. So we will now take questions from the audience. Any questions?
Thank you very much, Madam Moderator. Let me commend all the speakers for the good work they did, and at least GNBF really took a peek. Mine is more of, I was just reminded that I might have forgotten my name, so let me reintroduce myself. My name is Andrew David Adejo, Permanent Secretary, Political and Economic Affairs Office in the Office of the Secretary to the Government of the Federation. Mine is more like a comment, and the comment goes to the fact that we need to start putting serious considerations into the human elements of controlling using technology. I say this because we've had a number of technologies put in place, but the human elements are pushing them back. I'll give an example. One of the problems we'll be having in Nigeria to attract businesses is the clog of clearing cargoes at the port, especially Apampa and Tinkan. What did the government do using technology? They developed an electronic call-up system. And what do the business partners do? They went behind the electronic call-up system. We're still disregarding the electronic call-up system. Even within the e-call-up system, they find a means of still creating a backlog that something that could have been seamless is still contributing to. So by the end of the day, that e-call-up crashed. Another example, we wanted to save cost of governance. The government developed integrated payroll and personnel information system. Every major agency should be on that list. For more than 1.5 years, our educational system, universities were thrown into shambles because the labor union of FASU said they are not going to be part of that IPPIS. And what was the IPPIS? What were they trying to avoid? A situation where one lecturer is receiving 3 annual salaries in a year, where he's teaching, where he's doing sabbatical, where he's doing emeritus. So I think we need to constantly look at that human element. I agree with you, sir, on the need for licenses in terms of differential costs for codes, and it's not even only for codes. But again, what is happening is that there are usually pushbacks from even the business community when we try to unify license collection. Within the ease of doing business, there is a one-stop shop that government is trying to organize. But the business community, using their links with different government partners, still want to remain in their cocoon. At least that's government is still trying to see how we'll break it around. And rather than come up with a law and say go this way, that the adherence will be more in the breach. Government is trying to see how we can cut around that. I thank you very much.
Thank you very much for your nice comment, and it seems like there are no more questions. So we have now come to the end of our session today. Our topic has been the role of technology in ensuring or encouraging integrity in business. Our panelists have affirmed that digitization can really, support government entities effectively oversee public resources such as tax authorities, procurement agencies, and finance ministries. We've also learned that technology can disrupt corruption by increasing transparency and enabling accountability by dematerializing services and reducing and limiting human interaction. So as we accelerate the pace of change to create the future that we want, may we think ethics while doing business and also ensure that we are ethical or we comply to ethics when doing business. Thank you very much thank you very much to the German Chamber of Commerce, AHK Nigeria, for this platform. And thank you once again to our panelists for making it here physically, not just connecting virtually. Thank you for your efforts and for your very wonderful and truly interesting submissions. Thank you.
Thank you very much indeed. And